Now, as we wind up 2018, let's also take stock of how various asset classes performed through the year, as well as look at the kind of returns that investors got from them. Mangalam Maloo is standing by with all that data. Mangalam, where was money made the most, and what was the overarching theme for the year?
Well, in terms of returns from all asset classes in 2018, two themes really stand out. It was either risk off or flight to safety. If you take a look at the equity investments, which are considered to be more risky of equity, debt, as well as gold and real estate, equity investments, the frontline index, which is considered more safe, saw a 3.5% gain. The Nifty, that is, but slightly riskier instruments, and your wealth would have come off by 15 to 30%, depending on whether you put it in the mid-cap index or the small-cap index. The safety of the 10-year government bond really stood out in 2018 with a gain of nearly 8%, while the safety of the gold also did come off with about 8.7 to 8.8% returns on that yellow metal. What did not do well was the silver metal, which was down by about 1.5%, a bit of sheen robbed of silver itself. If you took a holiday in 2017, saved some dollars from there, you would be higher by about 9.5% on the value of those dollars. That was the sort of depreciation that we saw in the Indian rupee. So the dollar itself gave you about 9.5% returns as well. But if you thought buying a property was cheaper in 2017, you would have gotten 10% cheaper as per the Prop Equity Real Estate Index. For those who believe that parking money in the mutual funds has been good, in 2018, not so much. Over the long term, perhaps yes, because if you take a look at it, the medium to long duration debt funds have given you about 4.7% returns, as well as the short duration funds have outperformed the long duration funds about 6.1%. But together, they have still underperformed gold as well as the 10-year government bond yield. In terms of balanced funds, which are a mix of both equity and debt, the ones which were a little more aggressive with higher allocation towards equity saw a decline of about 3.1% from the start of this year. And we had the slightly conservative balanced funds, which have a higher exposure to debt and lower one to equity, still would have been flat to mildly negative in 2018. So two words that sum up all asset class returns in 2018: risk off and flight to safety.